Howdy there, folks. We got a lot to get into here today on the Reaction channel. First up here, PayPal had a big conference yesterday, or was at a conference, and the CFO spoke about a few different things. So we're going to speak about that at the top of this video. Then we got a 5-piece. Yes, a buy one, get 4 free in this one here today. 5 different videos to react to. This little 40-second clip talking about a bunch of different stocks. I want to give my opinion on those stocks there. Then we're going to get into Tesla a little bit. There's this little clip. Tesla's next vehicle will be a growth catalyst for the company. So looking forward to getting into that one. Then we're going to do this little 1-minute clip here. Tesla downgraded by Wells Fargo, but then I'm going to hear that same gentleman speak more in depth about it there. So obviously Tesla's got a lot of debate around it right now. Holy smokes, that's no dang jokers. And then the last one I want to react to is we're excessively worried about markets from a sentiment perspective, says Brian Belsky. So looking forward to getting in that one. Appreciate y'all joining me as always. I'll ask in return, smash that thumbs up button and make sure you're subscribed here to the channel. If you're not subscribed, make sure you're subscribed, okay? We just hit a new all-time high subscribers in the history channel. Appreciate y'all. Also, if you're looking to apply to join private group, that will be the pinned comment down there today to apply to join us in there, okay? So, PayPal's CFO absolutely delivered today. This was posted yesterday, okay? Now, I haven't actually listened to the conference personally yet and looking forward to listening to that, but basically, kind of the gist of it is what I heard was guidance is overly conservative and PayPal is looking at improving products while driving profitable margin accretive growth. That doesn't come as a surprise there. Overly conservative guidance, that's what I had a feeling with, and that's good that they kind of cut that out of the conference. From Miller's comments, the CFO, there's a decent chance of additional layoffs. Now, that's kind of a big new development, and that's something I've been thinking is definitely a possibility with PayPal. There's a lot of talk about there's another layoff coming at PayPal, likely within the next 3 months, is from what I heard. We'll see. We'll see, but there's a decent chance of additional layoffs, product divestment, and more than $5 billion of buybacks. From what I heard, they're going to try to, every bit of cash they got coming in this year, they're going to try to basically use that to buy back shares. So, my stance on this is, what do I think about that, and kind of what do I think about PayPal stock from here? So basically, I think they could do another layoff. I think there's a decent probability. I think Wall Street wants to see another layoff for them. If you look at how many employees they have hired versus their peers, I mean, it's like a night and day difference. And there's just a view that PayPal does not need nearly as many employees as they have. And they probably have a lot of people doing duplicate roles and just like a lot of the stuff that happens when you add too many employees to a company, right? And we've seen these companies get much leaner. Meta's a perfect example, right? And actually move much faster. So I think there is a decent probability there's one last layoff at PayPal coming. We'll see, though. We'll see. It's impossible to know for sure. And then in terms of the buyback, yeah, that doesn't come as a surprise. Obviously, with the share price trading at where it's trading at, I'm not surprised at all. They're going to do a buyback there. And then divesting of business, if they do any divesting of any businesses, it's going to be some of those little small businesses that are not very meaningful to the company. That's what would happen as far as that goes. So I don't see them divesting of anything that's core, like obviously PayPal, Venmo, Braintree, anything like that. So we'll see. We'll see. Alrighty, let's get into some videos here. First one up here, talking a little stocks.
Live Nation for a minute?
I do, because it's a new 52-week high. Stock is 103. The highest level it hit back in 2023 was 98, so it is now above prior resistance. Stock looks really good, and I think this summer it's going to be another big summer of shows. You'll hear about Olivia Rodrigo. You'll hear about Luke Combs, Drake, etc.
Okay. Bren?
Estee Lauder. Stock's been under a lot of pressure, but we think it's at a new inflection point with things troughing, new focus on innovation.
Okay, before we go further here, Estee Lauder, I mean, it's such a great traditional brand. I think it's okay buy. In terms of Live Nation, I don't like it. The reason I don't like Live Nation is the numbers are going to get harder and harder for them to beat. I mean, they've come off some massive tours, right? And so I think those numbers are going to get harder and harder to beat at this point in time. They already ran through the kind of revenge concert going situation that they had in 2022, 2023. So I don't like Live Nation. Also, the government's looking into them very in depth, and there could be potential breakups of certain business lines and certain ways they do business. So Not a fan of that one.
Love when things are out of favor, back above the 50-day moving average.
Jenny.
Supporting Bill's bank stocks, Columbia Bank shares 7.75% dividend yield.
So I don't have any opinion on that bank, but Google McDougal, he was talking about buying Google there, right? So in terms of Google, here's the deal. It's an okay buy. I don't love it as a buy. The more I've looked at Google, and the more I'm concerned about some potential disruption in Google's business model. So, and the other thing to factor in is Google's going through a very tough time period right now. Not as tough as Meta went through, but you got to also remember Google right now is trading at a forward P of probably 19 to 20, somewhere around there roughly, right? Meta at the bottom actually got all the way down to a forward P of about 10. So, you could think 50% more downside for Google. I don't think that's probably going to happen though, because Meta, when they were going through their stuff, that was simultaneously while the NASDAQ was getting absolutely obliterated, right? The good thing for Google is they're going through this time period right now when the NASDAQ's actually doing very well. So, the moral of the story is if the NASDAQ were to actually get hit, Google's got a long way further to go down. But as long as the NASDAQ holds in general, Google won't have that much more downside in the short term, and a decent probability of upside there. So yeah, that's kind of my views there. Let's get into Tesla.
Price target of 298 joins us right here at Post 9. Not going your way today, Tom. Why do you feel like things are going to turn for this company?
Yeah, I mean, look, this company is in between two waves, is what Elon calls it, right? You had the Model 3 and the Model Y, which is largely saturated. The next big catalyst is going to be the affordable car. Unfortunately, that comes in, H2 25. So he doesn't think about things on a day-to-day or month-to-month period, as you probably know.
It's funny. It's just like Cybertruck's just like people aren't viewing it as anything, right? This man just bypassed over Cybertruck. It was like Model 3, Model Y, and the Gen 2 vehicle or whatever we're going to call it, right? I mean, Cybertruck's still the most talked about, exciting vehicle to launch in the history of mankind, factually, right? And so, I mean, it's just crazy. People are just bypassing that, and I'm like, they're going to sell every Cybertruck they can possibly make for years to go into the future. And I think the margins on those Cybertrucks long term are going to be absolutely amazing. So the margins for this next couple quarters for Cybertruck are not going to be good because they're in a ramp period, and margins are always bad when you're ramping. But once this baby's ramped in the back half of the year, and especially in 2025, oh baby, I think those margins are going to be top tier, like best Tesla's ever had in terms of a vehicle.
Oh, he's looking at things from a years, if not decades perspective. So we're just in between this period of two lulls. Eventually, we'll get this catalyst with this vehicle that'll come out. And there's some long-term tectonic things that people just aren't talking about, which folks like me will start writing reports about and get folks interested eventually.
So, such as?
Energy storage. Nobody's talking about this. This is trillions of dollars of opportunity. Problem is, it's like decades away, potentially. These guys have 15% market share in this business, and the profitability is higher than the profitability of cars. And then, of course, autonomy, right? There's just a lot of negativity in autonomy today.
Yeah.
You guys ever used FSD? I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone. We're finally going to get this version 12 this year, which could get the attach rate up. The problem is not enough people have tested this thing. Once you have people test it and the pricing needs to come down, that can change things dramatically. People look at it as a software stock, not just
like I said, in regards to this, if Tesla wants to change the game, if Elon Musk wants to change the game for Tesla, if he wants to change the game tomorrow, one change, $99 a month for FSD. $99 a month for FSD, and I'm telling you, the amount of people that will start using FSD and will sign up for that subscription will go through the moon. Right now it's at $199 price point. That's a price point that a lot of people have trouble justifying. I'm telling you, bring it under $100 a month. That's the magic number. And people can begin to wrap their heads around that. And I'm telling you, downloads would go to the moon. And it's all straight profit. So they charge $99 a month. It's all straight profit. And so that is what I look at, and I'm just like, dang, man. I think it's going to happen one day. I think one day you're going to see Elon move that price to $99 a month, and I think you're going to see downloads go pretty insane when that ends up happening.
Right. You can sit here and talk about what's on the come, but 25 is a long way away to wait for this new, cheaper model. And so I do wonder what happens in the intervening years at this point to at least keep the stock where it is, if not battle those who say EV sales growth is slowing down. Used car prices for Teslas, for example, are a key indicator that this is not going the way they want it to.
Yeah, you're right. Things could get worse before they get better. There's no doubt about it. My job is to say where this stock will be a year from now, not next week. So, yeah, you're right. And the other issue is, while I think they'll hit the volume target that the sell side has, I don't think it's that aggressive, actually, for 24. I think that'll come from price cutting, which impacts profitability, and that's what everybody worries about. So, you're right. Near term, definitely challenging. Elon says it all the time, right? But again, you got to have a broader view of it. And I don't know about you, I can never time this thing, right? So, it pops when it pops, right? Somebody like me writes a big report and everybody gets excited, and that's the narrative that changes things. Near term, though, I just don't know what the near-term catalyst is from a data point perspective that re-rates the stock.
What percentage of your valuation
I do. I'll tell you in just a moment. I do.
model is the core auto business?
10%.
10%?
Yes.
And the rest is energy?
Autonomy and energy.
AI?
Mostly autonomy.
Mostly autonomy.
Yeah.
And what about AI robotics? Or
I don't include robotics in there at all.
because
right.
because of the risk he might do it elsewhere or something
We
else?
just don't have any evidence of a product that's out there in the market making money. Energy storage is already making a bunch of money for them. And autonomy, they do have an FSD product, which is really compelling. And they're charging $200 a month for this product.
How about China risk? If in fact things really, I mean, TikTok's just one example of tariffs. What may happen a year or two from now?
Yeah, no doubt. It's definitely a risk right now. We saw the Q1 numbers. I think those have to come down on deliveries. A lot of that is China New Year. But look, structurally, it's 40% of their volumes. But at the end of the day, their product that they sell, they do have better profitability than any other car company, maybe besides BYD, right? They should do well long term. And again, auto business, 10% of my valuation, right? It's really an autonomy business and an energy storage business.
All right, so these folks were acting like they don't know a catalyst that can help out the stock in the short term. I know the catalyst. There's one thing that could happen that will change the trajectory of Tesla stock completely. If on the next quarterly conference call, Elon and the management team say that margins are going to start going back up in the back half of the year, done. It's game over. The stock's going flying again. We're back way over 200, and we're just going to roll from there for a long time to go in the future. That's all they have to say. That one sentence would matter more than the numbers, the revenue, the net income, what the next quarter's number is going to be, what the deliveries, what the production. That one thing so far massively would overweigh every other thing. The fact that margins would start going back up in the back half of the year would change everything overnight for this stock. And next thing you know, people would be trampling over themselves to buy this stock again. And so that's the one sentence, and that's the catalyst. That's all that needs to happen. Until people are confident that margins are in a bottoming period and they're going to start going back up, until people are confident that they can't buy this stock. And so if Elon came out and said margins back up in the back half of the year, we're going to start increasing margins, and that's going to roll into 2025, whoo, night. Next one up here, Tesla downgraded by Wells Fargo.
With no growth. Easy question. How do you value a growth company with no growth?
I mean, we usually use a DCF. You know, you have to look at the long term, right? So, and then you look at the earnings in the out years as well. So we look at a traditional DCF valuation, looking at the long-term growth prospects, and then we also try to normalize it, what you're pricing in. And even on our price target, I still think you're pricing in 10 million vehicles in 10 years. Long way out, but it's still quite a big number from where we are today.
You've got no growth this year, negative volume growth next year, growth the year after?
I have about 10%, a little over 10% growth in the year after. That is supposed to be when Model 2 hits. And yeah.
Next year. Got no growth this year, negative volume growth next year, growth the year after?
Negative volume growth next year? What? You would be flipping my flapjacks. Does he know Cybertruck's going to be fully ramped next year? That's crazy. And interest rates probably, I think a high probability, are going to be lower next year than what they are this year. That's wild. That's a wild
I have about
assumption.
10%, a little over 10% growth in the year after. That is supposed to be when model.
That is completely fair if you think Tesla's not going to grow the business this year. I think that's fair. But to say this company's not going to grow in 25, I think is crazy talk.
And to be honest, there's
outside of a
risk to
massive
that,
recession.
We'll see how, we'll see what the potential Model 2 is. They're using what's called unboxed production, which has actually never been done before. So it's high execution risk to bring that to market.
Is this a Tesla problem, or is this an electric vehicle market problem that Tesla's catching up to?
I mean, what I'm talking about is really more of a Tesla problem, to be honest. I mean, I'm pretty cautious on the auto industry in general right now. I have sells on all the Detroit 3 that I cover. But I think you're talking about a product that's a bit old. We're seeing...
Okay, that's important. He's negative on all the automakers. He said he's got to sell on all the Detroit 3. Okay.
Are just not interested in. And what we found in our report, and one of our real top concerns why we drove the downgrade, is that the impact of the price cuts is having a smaller impact on volume. If you go first half to second half, volume went up just 3%, cut price 5%. And the pricing cuts are painful. It costs almost $7,000 in gross profit per unit lost since they started these cuts. And then, as you mentioned in the intro, you have risk to the brand. You have risk to residual values too, and that's going to cause those disgruntled customers when you come back and your vehicle's worth less. So there's been a lot of pain to do these price cuts, a lot of profit losses, and we're not actually seeing the volume. And that's why I feel like they're going to have to make a trade-off at some point and just sort of capitulate that they can't really grow deliveries with price cuts.
But here's the deal with those price cuts. Yes, painful. Absolutely to go through it, painful. Margins go down. You could have upset customers, all those sorts of things. It is certainly a painful process when you're going through it, right? And Tesla's experienced that last year, this year, right? But the one massive factor no one's talking about nearly enough, in my opinion, in regards to these price cuts, is now something very important has happened. Now the consumer is starting to view Tesla, and this is just really starting because it takes like a period for everybody to kind of get educated on and catch up. Now the consumer is finally realizing, oh my gosh, like Tesla's a value. And you could never say that in throughout Tesla's history. It was always, oh, Teslas are expensive. Oh, Teslas are expensive. Oh man, you must be doing well for yourself. You drive a Tesla, right? There was always the talk in regards to Tesla. And for the first time in its history, as a company, people are looking at Tesla and saying, wow, that's a great deal. That's a great value. I can get a Tesla for blah, blah, blah amount of money. Oh my gosh, like wow, I get all that. I get a vehicle that nice. Wow, I get all that technology for that price. Wow, and I compare it to this. Oh man, this wins. And so that is something that's going to play out for this company for the next 5 to 10 years. That is way bigger than just like the short term. The short term, it just sucks. But the long-term benefit here is going to be exponential. And so I just, I don't think that more people should be talking about that. Next one up here. Let's listen to this Wells Fargo man go more in depth here.
Downgrade to underweight from equal weight over at Wells Fargo, citing numerous headwinds ahead. The firm expects volume to disappoint and also lowered its price target from $200 a share to $125. Here's the analyst who made that call, Colin Langan. Phil also on the line with us. Colin, welcome. Good to see you. I'm curious, what is the market share of Tesla in the U.S. Among total automobile sales, auto and truck sales, and among EV sales? What kind of share do they have?
I mean, they're very small into the overall market. I mean, they're very large in EVs. I mean, what we're seeing, and that was the point of our report today, is that we're actually looking at the impact of the price cuts are surprisingly low at this point. We saw volume actually, if you look at first half to second half globally, up just 3%, and pricing was down 5%. And that's really what driving our lower deliveries. We're expecting deliveries to be about flat this year because we're really expecting more limited ability to cut price. Otherwise, you're going to hit a point where you're not very profitable anymore.
So you cut price, you hope volume will increase, but you're not seeing the kind of volume increase that is commensurate with the price cuts. What about this Model 2 that they expect to bring out in 2025? Is it going to be a game changer, or is it too little too late here?
Well, I mean, I think that was the other part of our report today. We were looking at the potential for Model 2. I mean, and one of the things that really is concerning to me is that it's different from other launches. This is a mass market priced SUV. That's going to be very tough to do. I mean, the actual, if you go to an internal combustion engine, compact vehicle today, they're not very profitable. You add on an e-powertrain, you're probably starting off at a losing point. And then if you're then really betting on this unboxed production, which is the new manufacturing methodology they plan on launching with the Model 2. That's a bit of a wild card. It's just never been done before, and we still estimate you need most of those benefits to come through to get this to profit levels that we're seeing on their current vehicles.
What does unboxed production mean? I noted it in your note, and I wasn't sure what...
Okay, so, this is where history lessons are important, okay? When the Model 3 first got shown off, what was the price point that was talked about for Model 3? It was $35,000. Oh, it's a $35,000 Model 3. Everybody got really excited, right? It was super talked about. You couldn't get a $35,000 Model 3 for a long, long time. And actually, you've hardly ever been able to get a $35,000 Model 3, right? It certainly did not happen for years and years and years. So Elon might show off a $25,000 product, but there's a high probability you're not going to get it for $25,000. The first generations of it might be $35,000, might be $29,000, $32,000, something like that, okay? So I just think that's another big factor to kind of take into account. The second big factor I think, people are missing in regards to that, right, is this next vehicle, it's really an FSD play. It's not necessarily about let's make a bunch of money on the car. It's about let's get this car, this vehicle, we can call it that, into as many people's hands as possible because we're going to be able to sell FSD on it, right? Robo-taxi opportunity. That's what this next one's about. And that one's really, that's more of a 2026 and beyond story. I think the next few years, it's really about 3Y and Cybertruck with maybe a semi on top of that, right? So anyways, I think that it's important to understand kind of the goals are different than maybe past vehicles with Tesla.
Yeah, I mean, it is a new term. No one has actually done it before. So the idea is it's a change in the entire assembly line. And from experts that we talk to, they're trying to eliminate all the bottlenecks, automate as much as possible. The vehicle won't run through one line. It'll actually be assembled in different subcomponents and then come together at the end. This enables, one of the potential benefits maybe is you could put more throughput through the paint shop, which is the bottleneck today. But also you probably could automate more along the line and eliminate some of the manual inputs. So it's supposed to improve your efficiency. What we found in our report is that, there's probably between labor and fixed costs that are absorbed per the vehicle, it's probably $9,000 to $10,000 per car. So if you could double that, there's like $4,000 to $5,000 in benefit. You really kind of need most of that benefit to get Model 2 to probably profitability given the powertrain costs you'll be adding.
Phil?
Hey, Colin, it's Phil LeBeau here. I'm curious, when you look at all of the headwinds, not just for Tesla, but for electric vehicles overall, what do you believe is the biggest one right now? Is it the fact that we're not seeing enough models at the lower price points that would drive sales? Is it the concerns about range adoption or range anxiety, charger anxiety that is out there? What do you think is the number one headwind?
I think number one has been pricing. I think it's, and I think it's just the price. I also think we need sort of SUVs too, so I'm not sure a small vehicle actually necessarily addresses that for what Americans want. So I think one, people want more affordable EVs, and then two, it's always been charging. But the one thing we talk about in the industry, and one reason we're cautious on all of the Detroit 3 as well, so we're pretty cautious on the automakers right now, is the fact that there's still regulations coming. So the industry is going to be a really tough spot here because the automakers are going to need to sell more EVs to hit those standards, which means everyone's going to be forcing these vehicles into the market, which is never very good for profitability when that happens.
Yeah, but no one's got price points like Tesla's got price points outside of China. All right, next one up here. We're excessively worried about market sentiment. Ooh.
Chief Investment Strategist Brian Belsky has a target of 5,100. Joins us this morning. Brian, it's good to see you. You say don't mistake our indifference on market direction as a recommendation to avoid exposure to U.S. stocks, right?
No, we don't. Thank you so much for having us. We're really worried about the Johnny-come-lately bulls. We've been saying that we're in a 25-year secular bull market since 2010. In this new part of the bull, this cyclical bull market, started in October of 2022. We said that in November of 2022. Now it seems everyone's saying now what we said 16 months ago. From a sentiment perspective, That has us excessively worried. I'll remind everyone that our bull case that we published on November of this past year, 2023, was for 5,500. So it's not that we're bearish. We just think on a near-term basis that the market is ahead of itself, that everyone's kind of chasing the same stocks. And this herd mentality traditionally is not a good time to be buying stocks and adding to positions, but we're still bullish longer term.
You also point out you think the market's placing too much emphasis on the timing and the magnitude of Fed cuts. When does that end?
Fair.
Well, too many people have been watching Fed funds futures, which, oh, by the way, have been wrong for a year and a half. And I think the predominant theme of the Fed and watching and doing whatever the Fed says has really been in place now, for all intents and purposes, Carl, since August of 2007. And when we were down to zero interest rates, that's not normal. I think what is going to happen over the next several years is we return to this normalcy of a 3 to 5% 10-year Treasury. Every time the 10-year ticks noticeably above 4%, the market sells off. And we think that there's some risk that the Fed does not do anything. And oh, by the way, that's not risk. That's actually okay. We actually said this in our report, too, in November, saying, wouldn't it be cool if the Fed doesn't do anything? And what if the Fed does nothing? And I think that there's a very good chance the Fed stays pat all year long, and I think that could surprise a lot of investors.
You're already at 250 for 24 EPS. Any chance that goes higher?
Yes. In fact, we think, and we, as you probably remember, we've been pretty bullish on financials, especially the money center banks, the asset managers, and the broker dealers. And we think those earnings in particular are way too understated. I think that's where we're going to get the big lift up, as well as some of the tech earnings that I think are going to surprise. Remember, seasonally, the tech stocks do very well the second half of the year in terms of their earnings. So I think we're going to see continued earnings surprise there. So our 260 number, which is our bull case, I think is quite attainable by year end.
Finally, at what point does election risk or election volatility risk begin to creep in? Is that a summertime story or later, sooner?
I think we give politicians way too much credit. We've written a lot about how politics have nothing to do with the absolute performance of the stock markets, what's happening in the economy, in the stocks in general. Like, just look at 2020, Carl, into 2021. The reason why the stock market went up in 2021 is because of 0% interest rates. Nothing to do with the fear of the blue wave and all of that, which everyone was worried about. And I think that's the best near-term example that, again, we give politicians way too much credit. However, I will say, there could be some volatility come around convention season, which is obviously in July, so hang on to your seat.
Yeah, 100% in regards to that, okay? All right, guys, appreciate you joining me. Much love. Thanks so much. Looking to apply to join private group? That's a pinned comment down there. Much love, and have a great day.